Good morning, good afternoon, good evening, everyone, and welcome to our next FP&A Trends webinar, FP&A Role in Capital Planning, Getting Beyond the Traditional. My name is Larissa Melnichuk. I'm Managing Director of FP&A Trends Group and the International FP&A Board, and I'm here today to help to facilitate this interesting discussion. But before we start, let me remind you that we have more than 550 practitioners from 70 countries around the globe. The majority of registrations came from North America and also from some European countries. But we have representatives from many countries around the globe. Let me remind you about the agenda for today. So we will look at the key steps for implementing continuous, collaborative, and connected capital planning process. We will look at the practical experiences from integrating strategic, financial, and capital planning. Then the role of modern technology in optimizing all phases of capital investment. There will be conclusions and recommendations, and of course, there will be a Q&A session as well at the end of the session. Now, this is a good time to introduce to you our experienced international panel. I would like to ask our panelists to switch on their cameras, to unmute, and let me do a very quick introduction. Thank you. João Almeida, who is Chief Financial Officer at Hub Terminals AP Moller Maersk. João is a member of our Amsterdam FP&A board. João has a lot of experience in different very senior roles, more from CFO point of view. At different capital-intensive industries. And also João has a very international experience. He worked practically at each continent around the globe. And today, João is going to share with us his view as a CFO of global capital-intensive organization on what are the best practices and how we can improve our processes. João, you're welcome.
Thank you very much, Larissa. Pleasure to be here today.
Thank you so much. The second panelist is Jonas Ekegren, Head of Business and Capital Planning. And the company is called Landsforsa Greencar. I can't pronounce it. It's a very big financial services organization. Jonas, help me. Landsforsa Greencar.
Länsförsäkringar in Swedish. I think it was pretty good.
Yeah. One of those leading organizations, and Jonas joining us from Sweden, from Stockholm. Jonas has a lot of experience in managing FP&A, controlling capital planning, and also strategic planning in leading organizations such as Handelsbanken and other Nordic banks as well. And today, Jonas is going to share with us his experience on how we can integrate different planning processes and how integrating the capital planning process to FP&A and strategic planning can really transform the way how you do this planning. Jonas joined us from Stockholm, as I already mentioned, and Jonas, you're welcome.
Thank you very much. Great to be here.
Thank you so much, Jonas. The next panelist is Jayat Began, who is VP, Vice President at Finaria, the company that actually created the first very interesting process and that helps to manage the capital planning process. So this is the modern technology. Jayat has a lot of experience in capital planning, but also in corporate performance management, working for a number of different organizations. And today, Jayat is going to share with us how technology can help us to manage capital planning process. What are the innovations in this area? Jayat joined us from North America. And Jayat, you're welcome.
Thank you, Larissa. It's great to be here today.
Thank you so much. Thank you, panelists. You can switch off your cameras now, and let me give just a very quick introduction to FP&A Trends Group. So we have 27 chapters in 16 countries on 4 continents, but obviously because of this situation, we continue to travel digitally. And the latest news from us, we started to implement the best practice workshops and FP&A consultancy. about this webinar. So it would be 1 hour webinar, and your participation is welcome. There will be 2 polling questions. Please vote using this technology. There will be very interactive Q&A session at the end, but subject to time. And if we don't have enough time to answer all of your questions, we will do this after this through email. A presentation is available right now in the handouts part. You can download it, but obviously you can see it on your screen. And you will receive recording of this session just maybe 2 days after we finish this webinar. So you're welcome to listen and you're welcome to share. And of course, after the webinar, we would like to ask you to participate at the survey in order to understand how we can make it better. And before we start, I would like to say thank you so much to our technology partner to sponsor for this webinar, Penario. This is enterprise software purpose-built organization that implements the technology for capital planning and technology that unifies capital budgeting and project forecasting with approved workflow in order to deliver your process very easily and very flexibly. Let me start with some definitions before we go to the actual presentations from our international panel. What is capital planning? Obviously, there are a lot of different definitions, but let me share with you, remind you, our very classical accounting definition. So this is a plan for companies' capital expenditure. But capital expenditures are those that made over a period of more than 1 year. And they are used to acquire assets or to improve useful life of those acquired assets. So this is just a general, classical, traditional definition. But what is happening in reality? At a number of webinars, we already discussed the subject of integrated FP&A, the subject of so-called extended planning and analysis, extended P&A, XP&A, how we call it. And normally we are talking about integrating or connecting all of those 3 planning processes, as you can see here. So strategic planning process, business planning process, and operational planning. And obviously, capital planning is the process that is tying all of those planning processes. And the reality is that in integrated process, all of those processes are connected. Preparing for this webinar, we did some research. We interviewed some of our global FP&A board members, and I consolidated here those problems that are currently happening at the process of capital planning. Obviously, this is limitations and availability of capital, and one of the biggest problems of traditional capital planning is the fact that the bank is not open all year around. In reality, if you don't have a budget, capital budget, at the later stages of the year, let's say from September, October, it would be very difficult to receive this capital in traditional companies. And of course, in this incredible business environment, planning long-term in the environment of uncertainty, it's very, very difficult. How we can deal with this, how we can improve our long-term projects and how we can manage them. And of course, the biggest requirements are collaboration, using data, playing different scenarios. And many of us don't have this technology to help us. And of course, ability to evaluate and control your projects. It's another challenge that we have. Let us see different points of view, different perspectives, and different experiences. I would like to invite João Almeida, Chief Financial Officer, Hub Terminal at AP Moller Maersk, to share with us his cumulative experience that is coming from a number of senior positions and number of capital-intensive companies. So how we can implement this continuous, collaborative, and rewarding capital planning process. João, you're welcome.
Thank you. Good morning, good afternoon, and good evening to all those present. It's a pleasure to join this panel with Jonas, Jared, and Larissa, and sharing our insights on the theme of capital planning, top of the CFO agenda. Over the past 20 years in leadership roles at Maersk, CRH at Numico, which was acquired by Danone in 2007, I've been part of decision-making on multi-million, multi-year capital allocation and execution. We are faced daily by challenges around data, technology, funding prioritization, fast-moving and uncertain business environments, scenario planning, and barriers created by silo thinking in our organizations. So my aim today is to share the insights and experiences gained to support you shape the vision and paths you take around capital planning. So just a bit of context, the container transport and logistics industry has felt the shocks from COVID-19 across supply chains, impacting demand and increasing business risk. We've been more fortunate than other industries, for example, the travel, the hospitality, and the leisure industries. They're reeling from demand drops of up to 80%. At Maersk, we have tried to move our capital planning processes to being more flexible, more agile, more transparent, and interconnected across the functions. At our terminals division, where I work, we are on track to deliver a significant improvement to our return on invested capital levels after years of underperformance. After completing our last development phase of over $4 billion in greenfield terminal projects, we've significantly improved our capital investment practices. We've implemented new technologies in capital management, tracking our capital budgets versus actual spend, and importantly, updated real-time forecasts around CapEx. Our forecasting accuracy in our portfolio has seen improvements of 50% over the last 2 years. We've run global Kaizens to understand the underlying root causes to our forecasting challenges. A few years back, during my tenure at CRH, a global leader in building materials, we benefited from a more integrated approach between the full end-to-end strategic, capital, and business planning processes when faced with the 2008 financial crisis. This actually enabled us to deliver an ROE level of 12% per annum at one of our largest JVs, of which I was the CFO. At Numico, now part of Danone, we built a foundational financial planning and analysis function to deeply understand our marketing spend insights, which contributed to actually building a lot of capability around business partnering. This leads us nicely to the next slide, where I'll share insights to strengthen your capital planning processes. I'll share strategies to support you maturing your capital planning agenda. First, break down silos between strategic planning, financial planning and analysis, and business finance. This will really enable a more coordinated approach towards reaching your strategic aims of the organization. Secondly, integrate planning and performance systems as much as possible. At Maersk, we're driving a standard way of working methodology underpinned by a strong Kaizen mindset around daily management, improvement initiatives, and breakthrough longer-term objectives. Thirdly, I'd really recommend a democratization of data by clear and strong master data governance foundation and standard end-to-end process landscape. This will really enable your digital transformation agendas. Fourthly, balance your short-term imperatives that are obviously impacting your business and longer-term strategic growth by implementing flexible planning systems, enabling more agile processes to capital planning. Fifthly, standardize return asset and investment return matrix such as ROI or ROIC or return on equity through the implementation of technology. And finally, mature your investment post-completion reviews through mandatory, through standard and audited processes, enabling a continuous learning cycle. On the next slide, I'll walk you through the typical obstacles you should expect in maturing your capital planning systems. As you all may know, typically important change programs fail to meet their intended objectives on average around 70% of the time, irrespective of scope, nature, or industry. It's important that you're prepared for these typical pitfalls when planning your journey in implementing improvements in capital planning and how you can address these. And I'll give you some examples. So the first one is no single template can be 100% replicated to your context or organization. You'll have cultural considerations that are key in understanding your appetite to change and the pace at which you go. So I'd really recommend that you adapt towards a more fit for purpose approach. Secondly, from personal experience, I've noticed that centralized and rigid approaches will actually slow down embedding your change capability in your organization. I mean, it's fundamentally important that buy-in at all levels is crucial for the long-term success of any sustained change initiative. Thirdly, as you may know, global organizations are challenged by numerous global initiatives being absorbed by the frontline and customer and consumer-facing businesses. It's fundamentally important that you prepare for and unblock organizational barriers to change. Further, how many times have we been in a situation where we've been swallowed by the technology or by the product or by the improvement or the initiative being rolled out, and we actually lose sight of the overall value proposition to be delivered? So a clear articulation of the value proposition and the impacts of this change will be greatly appreciated and beneficial for your journey. And finally, creating a culture of continuous improvement is fundamentally important. At Maersk, we are witnessing the benefits of a frontline owned change driven by a Kaizen mindset of devising solutions to business problem sets. So by doing so, you will build capability and knowledge for the longer term improvements in your capital planning. So thank you for your time and look forward to the comments of Jonas and Jared.
Joe, thank you for this story. Thank you for this CFO perspective on the latest trends in capital planning. I would like to ask our panelists to switch on the cameras and just a quick discussion here, the reflection on the presentation from CFO point of view. Jonas, what would be your subject matter on this presentation?
Yeah, first of all, thanks for a very good presentation. I mean, you said so many interesting things that I would like to highlight, but if I have to then nail it down to a few points which I picked up, I think the things you said around breaking down the silos, perhaps in combination with your comments around, so to say, not being too strict, being perhaps a bit flexible when it comes to this tension between the business unit and the centralization. I think those 2 points are extremely important, and you could say to some extent that they are universal to any process or anything that you would like to do, so to say, in a group. But I think they are really, really important in this area. So those ones I pick, so to say, as perhaps the most important. Then just another short comment then around this about democratizing data, which I think also is very, very important in this to create, so to say, one common truth and to perhaps break down these walls that you sometimes build up, so to say, even perhaps within business units. Those would be my comments.
Jonas, thank you so much. Great perspectives. And Jayat, what would be your perspective as a technology, as technology guy, as technology visionary? So what would you like to add?
Yeah, my observation. First of all, great presentation, Zhao. The color in your experiences, really helps to put this into perspective. You made a comment just around, standardizing the measurement criteria for capital allocation. We find that from an automation standpoint to be critical in helping the business units and the folks at the lower levels of the organization to be able to justify their investments for in comparison to some of the larger business units. And working with customers for years and years, we always find the smaller business units within organizations always seem to really get the short end of the stick, as they say, as it relates to capital allocation, because they may not be of larger or significant importance. So I think leveling the playing field and standardizing the ROI measurements so that there's more of a level playing field for all of the business units to be able to compete for capital, I think is really key as organizations look to really innovate and take thoughts and ideas from other parts of the organization to help factor into future growth of the organization. So that's a very important point from my perspective. And technology really helps to enable that, assuming the right scenarios and models are built into the technology.
Thank you for this. Thank you for the commentaries. But now let us see what is happening in the capital planning processes of our participants. Let me launch the first polling question. And when you see this polling question, please, can you start to vote? We would like to understand how would you characterize the capital planning process at your organization? And you can see the options here. Please, can you select one of the following? It's disjointed and inefficient process, or we do some things well, others not, or it's efficient and effective process. So where are you at the moment? Please continue to vote. More than 50% of you voted, just a few seconds. Please share with us where you are at the moment in terms of your capital planning process. Okay, so more than 60% of you voted. Let me close the poll and share the results with everyone. We can see that almost a third of you actually have disjointed and inefficient process. 64% already started the journey, so some things doing well, some things not so much, and 9% really at the efficient and effective process at the moment. João, what would be your commentary?
Yeah, so I mean, the results don't really surprise me. I've actually seen, depending on the maturity phase of your journey, that some of these answers are applicable to some of those, some of that phase. But I think the 9% efficient and effective clearly points to a lot of opportunity in the space across the organizations.
Thank you, João. I would like to ask Jonas to comment as well. Any surprises for you, Jonas?
No, not really. I wouldn't say so that there are any surprises. I think this, as João said, is quite typical. If you look at the 64% there in the middle, you tend to do some things well, and often there are some pieces in the entire, so to say, process or chain of events that you don't really handle perfectly or very well. So I think that it's not a surprise to me that we have a majority there, but as João pointed out, we have 9% who consider the process to be efficient and effective. So obviously big room for improvement, and that doesn't surprise me.
Thank you so much. From my side, I would like to say that it's very consistent with what we see around the globe. And also it's very consistent with this survey that shows more than 90% of organizations never realize their strategy execution gap, their strategic planning gap. And definitely capital planning has a huge role to play in this. So thank you for this. Let me hide the results. And now let us look at the view of head of business and capital planning and Lens for Shikrinar company. Jonas, you're welcome, and the microphone is yours. Before we start, I would like to inform everyone that what an interesting position you hold in your company. So definitely the responsibility for FP&A and capital planning and strategic planning, it's quite a rare position. We still observe around the globe that those roles are separate. So it's especially important for us to see your perspective on how we can make it integrated. You're welcome, Jonas.
Thank you very much for that introduction. And yeah, I can only agree. I mean, this role I have kept for 5 years, and in my past, so to say, I've worked with all these types of planning, but not within the same organization. So I think the normal setup is basically that you have it separate. But first of all, thanks for the opportunity to share some of my experience with all of you guys online. So let's not waste any time, but move to the next slide. First, some words about the evolution of capital planning in banking and insurance. We have been through a lot of changes in the last decades, mostly driven by external factors. Many of these events, such as the financial crisis and the following regulatory tsunami, as we like to call it, perhaps in combination with the online revolution, have both emphasized the need for and changed the focus in capital planning. We have moved from, at least in a period of time, being heavily focused on capital adequacy, the regulated part of capital planning, but are now moving more into focus on investments, mainly IT investments then, and also small cap M&A, which has really not been a focus if you look far back in time. So I would say the impacts this have had on capital planning in general is that we have realized the need to do it more frequently. We have also put quite some efforts into building models, which in turn have provided us with scenario capabilities. And this is very much, so to say, from the regulatory push. In recent years, we have focused more on integration with other types of planning, which brings us to the next slide. And I have been working with strategic financial and capital planning, including M&A, throughout my 20+ years of a career. And since 5 years back, as I mentioned just a few minutes ago, I run a department responsible for all these planning activities. And maybe that's a little bit unique, but that's the way we have chosen to structure it. And from working more intensely with capital planning in recent years, I would like to share what I consider to be some of the most important best practices when it comes to improving this field. First of all, and perhaps the most important, integrate. Make sure there are interactions and reconciliations between your different plans. But I'll get back to this on a later slide. So let's move to the next point here. And that is, back to the original slide. Sorry, was a little bit too fast. Follow-up. I still see, even in my company, that as soon as an investment is approved, people just run with it and do poor or no follow-ups. So I think that's really important to bring follow-ups into your investment committee, or what kind of fora you have for investment approval. In our case, we bring it into our strategy planning process and the quarterly business reviews. But this is a little bit depending on what kind of structure you have in your companies. Then the short and the long-term focus. This is something we have learned the hard way from being regulated and a heavy capital consumer. The short-term plan in combination with the long-term plan is equally important, I would say. The long-term plan have us discuss how to cater for capital needs 3 years ahead. Of course, it's very difficult to predict, but it's really valuable to have this long-term perspective, because then when you do the short-term planning, which we are doing more and more on a quarterly basis, then we can, so to say, backtrack a little bit towards the long-term plan, and that cater for very good discussions around the capital needs and the spending needs. Then review. This is also an area which we sometimes fail in, but it's really important from my perspective to review the plan frequently. We used to have annual plans, but now we are moving more and more towards the quarterly. And first of all, it doesn't fly with the ever-changing regulatory landscape to have annual plans only, but also other things happen. Suddenly we realize that it's better to buy than to lease something. Investments are pushed back and forth in time, not the least now with Corona. I think that has been an experience with many companies. Then allocation of capital is also something that I'm really supportive of. In banking, this has been there for ages, the practice of basically allocating the entire balance sheet down to business unit divisions or what have you. I don't think it's still that common in other industries, but I think it's really important to at least start on a very simple level with perhaps a simple balance sheet to start allocate the capital consumed. So you can actually integrate that into your ordinary performance follow-up and follow up the business units on return on capital. Then you get a really good tool to measure the impacts from investments, both short-term and long-term. So do not only focus on return on investment. And then simulate. Why bet on only one horse? I think that's usually a good relative or general term. We usually play around with a few parameters, such as lower income generation, sudden expenditures, etc. And this is, of course, very dependent on what kind of industry you're in, what kind of business you're in. But we think it's very important to play around with scenarios, especially now in Corona or COVID times, maybe. But I think it's equally important, actually, in so to say, normal circumstances. So let's then get back to the integration on the next slide. The integration of capital planning into other plans, I think, is very, very important. And we have to understand that capital planning is, as any other activity, it's mostly about people. So if I would recommend one thing you should start with to improve your capital planning is to get the people together, different kind of planning activities, and start to integrate. And no matter how advanced systems or methods you build, you will not benefit fully unless you get the people to cooperate. So back in the days, I could hardly find anyone that did do their capital planning or did not do their capital planning in a silo. I think to cooperate and share the responsibility for the output, that is something really important actually going forward. What I will explore in the future is perhaps to create planning teams where we basically put people that can cope with all these different types of planning, from the strategic all the way to the capital planning. Maybe they will be oriented per business line or something like that, but rather to do that integration than to have them separate in separate teams, because even in my organization, they are still separate teams, even though we work closely together. Then to this concluding remarks on the last slide. Because why should we try to integrate capital planning? I think the first is perhaps more of a question, but it's perhaps an evident question. Why do you not want to have consistent plans? And that is really a very important benefit you can get out of the integration. And your capability and capacity will increase when you get the people together. And this is also partly due to the benefits from mixing the different competences. And then how should you do it, or how can you do it? I mean, you might not have to reorganize, but team up, it can work just as well. And break down the silos, but make sure that everybody feels responsible for the output, all the outputs. And start by coordinating the process with other processes. And then last but not least, technology can actually really help. And I don't want to downplay the soft parts of this, getting the buy-in, etc. But actually, the technology have improved. So look around, there are opportunities out there. So thanks to all for listening, and looking forward to some comments here from Joe and Jared.
Jonas, thank you so much. This is a great presentation on experience from banking and financial services industry. And definitely your colleagues and yourself, you started a long time ago and implemented the systems and processes. So a lot to learn from you, from your industry, for all of us. I would like to ask Joe to give your perspective on this presentation.
Jonas, first of all, great presentation, great insights, brilliant. Actually, just two reflection points which really resonated hard with me was the first one in terms of the best practice that you built in your organization around building the capability of post-investment follow-up on an annual and quarterly basis, which I've seen not been done in the organizations I've worked in, and I think that's definitely something that I'll take back to my organization to work on. And then I thought particularly powerful was the move towards a one team, one mindset across all your planning activities, which might be unique to your organization, but as you were presenting it, really strike hard in terms of an opportunity, because it's clearly a moving away from the silo thinking and the organizational silo thinking that we see daily in our businesses, right? But great presentation, thank you.
Thank you, Zhao. Jed, your commentary, please.
I was on mute. Great commentary, Jonas. I would echo Zhao's sentiments. In the second to last slide, you referenced process and people, and I think we can all agree technology can take you to a certain point in helping you to optimize a process and make it more efficient. But in my experiences working with organizations over 25 years, the one thing that seems to always slip through the cracks is, really optimizing the process and then having management support a new process and getting tone from the top in regards to adhering to a new process, and then using technology really to help supplement and facilitate a new process. So I think your point around process and people is very, very important, because if you don't have those two, technology really, at the end of the day, really is useless.
Thank you so much for commentaries. Thank you for excellent presentation. This is the timing to hear from our global community. So the time for the next polling question. And the next polling question will be about the solutions that you currently use for your capital planning process. I'm launching the poll and I'm asking you to start voting as soon as you see the questions in front of you. Which of these are you currently using for capital budgeting and forecasting most of the time? Is it Excel spreadsheets? Is it custom ERP module? Is it internally built solution, FP&A system, or none of these? Maybe you're using something different. So most of the time, what do you continue to use? More than 50% of you voted. I can see interesting trends, and about to share with you just a few seconds. And we are closing the poll and we are sharing the results with everyone. No surprise at all that almost 80% of you continue to use Excel spreadsheets for the capital planning process. 8% have customized ERP module. Internally built solution is 6%. FP&A system is used in 10% of the times, and obviously nobody using nothing. All of those solutions are here. I would like to ask you, Jonas, to comment on this.
Yeah, I must say that I'm not surprised. I was hoping I would be a little bit surprised here, actually, that we could see more and more moving away from the Excel spreadsheets. Of course, Excel is a very powerful tool. We know all that, and it might be a good idea actually to use it, especially perhaps in smaller organizations or for very special needs. But I think also in this field, there's a lot of improvement to do. Then on the other hand, 24% is actually using something else, and that could of course be a good thing. But I think there's really an opportunity here to move, perhaps to increase the share of people who actually integrate this into their FP&A systems. I think that we see a really, what do you say, possibility for improvement going forward.
Absolutely, it's a huge opportunity for improvement, and we're about to hear from Jed how technology can help us. And Jed, your quick reflection on this poll.
Yeah, I echo Jonas's sentiments on the results of this poll as well. In working with a variety of different technologies on FP&A processes. Excel, tends to be still a tool that most rely on. I think as technology has evolved into SaaS applications, I would expect that over time, there would be less of a reliance on spreadsheets, but not surprising. I would say the only other point that I would make is, good to see that, none of these is at 0%, and that most organizations are looking at their capital planning process and looking to utilize some form of automation to make that a more efficient process for the appropriate users and stakeholders.
Thank you so much for this. I'm hiding the results. And definitely it's great news that 25% already using something else, not Excel. Jed, this is the time for your presentation to look at the vision, how technology can help us. What is your experience? You're welcome.
Thank you, Larissa, and thank you, Joe and Jonas. Great presentation. It's been a pleasure working with you over the course of the past couple of weeks as we've prepared for this. So as Larissa had stated, I bring over 25 years of experience working with organizations across industries, CFOs, directors of FP&A, and helping them to really understand their FP&A processes and working with them to optimize those processes either through best practice process and or automation. So I'm really delighted to have the opportunity to share that experience with you here today. Before we get into the technology roadmap, I think we need to understand the issue, which is really I think within most organizations, capital planning is a disconnected process, and with Jonas and Zhao's experiences and some of the commentary that they've made, I don't necessarily need to repeat some of the detail here, but when we look at disconnected processes, we just look at a very inefficient process, siloed data, disparate systems. The one thing that has not been mentioned really is the time element that factors into a disconnected process. I think we can all agree the last 12 months as we've worked through this pandemic, we've seen lots of organizations struggle with their capital priorities, and some of the commentary and feedback that I've received from prospects that I've worked with and some of my former customers is that if they had the appropriate solution in place, which was a unified integrated solution, the time element of getting capital allocation requests approved could have been the difference between not just surviving the pandemic, but potentially thriving in the pandemic. And I've heard a number of those examples from prospects that I've been in discussions with over the course of the past 12 months, as well as some of my former customers who are utilizing some of these platforms. So a very important note to really understand the issue, which is the disconnected process. And with that, as we evolve from a disconnected process, we look to move to a more unified process. And this unified process, next slide, please, really takes into account all of the factors that play into really what should be the optimal process or most efficient process around getting the right decision makers together in a process, potentially in a platform, providing them the right data that they need to make the proper capital allocation decisions, and then also leveraging the right technology. One of the biggest benefits of working within a unified process and ensuring the right communication across the organization is the ability to get ideas, investment and project ideas from all aspects of the organization. We referenced some of this in some of the earlier commentary, but some of the best ideas around innovation and ultimately which lead to growth for organizations come from within some of the lowest levels within the organization or some of the smallest business units. And having a unified process really helps organizations to bubble up those ideas to the top of the decision-making tree so that those ideas can be taken into consideration for capital allocation and then ultimately hopefully having a much bigger impact on the capital allocation process and ensuring growth for the organization. Now that we've seen the evolution from a disconnected process to a unified process, we want to take the next step of looking at how automation really can help you move from a unified process to what we call an integrated process. Next slide, please. And so if we look at this slide, we look at the capital planning solution as sitting in the center of the financial systems enterprise infrastructure. You have your traditional ERPs, your traditional EPMs, you have other source systems like project and portfolio management systems, construction management systems, procurement systems. All these systems have real-time data that factor into the capital planning decision-making process. And to be able to pull that data into one integrated solution really helps to provide senior management the data and the decision-making that they need to properly allocate capital to those projects and investments that deserve that capital. In the context of having a capital planning automated solution, what we get is a single source of the truth and a process which starts from the beginning or investment or project ideation all the way through to the providing the capital to that particular project or investment. And an automated solution really helps to take you through that process and should provide all the steps necessary that should be involved in the capital allocation process, all the way from project and investment ideation through the planning and budgeting of that particular investment or project, going through the request and the approval process to ensure that the appropriate parties are involved in approving each capital request, and then going through the iteration of the updating, the forecasting, and the reporting. And the biggest benefit of an automated solution really is the ability to iterate and to see that process through, and to be able to look back at historically at projects and how they've performed, and to be able to take that data and have it factor into the forward decision making as it relates to looking at similar projects that you've performed in the past and making the decision as to whether they will provide the return on investment that all organizations are looking to achieve when they're allocating large sums of capital to a specific investment or a specific project. One other point to note here is the ability to do post-completion reviews. Zhao and Jonas both mentioned that in some of the best practices that they're either doing or would like to do in their processes. An automated tool really should give you the ability to do a post-completion review, not just looking at the return on the investment, but also looking at the stakeholders involved in that decision-making, the reporting, and looking at the numbers in regards to helping to facilitate decision-making for, again, similar future projects. And so now that we have one integrated platform to be able to help you perform your capital planning process, ultimately we get to really what is the key to automation and modernizing the capital planning process. Next slide, please. And that ultimately really is understanding your cash position and being able to allocate your capital properly as it relates to those projects that need to be performed. And in our view, those are your sustenance and your mandated projects, those projects that are required by some form of regulation. So those projects we all know will require capital. Moving to an automated solution really should provide you the ability to understand what capital is needed for those particular projects, but more importantly, the ability to look at your excess capital and your ability to now invest that capital in your strategic growth and your high return projects. And this is ultimately where an automated solution will really help you to provide that return to your shareholders that are looking for year-over-year growth of your particular organization. And so having an automated solution and an integrated solution really helps you to prioritize that capital and provide the funds that are necessary for those investments and projects that are going to ultimately result in innovation and growth. And so with that, I thank you for your time today. I thank you for the time that Larissa, Zhao, and Jonas have put in, and happy to address any other open questions. Larissa, the floor is yours.
Jed, thank you so much for sharing with us your vision and your experience. Definitely those unified platform for capital planning and for scenario planning, this is the way to go. I would like to ask our panelists to give their perspective on this last presentation. Zhao, what would be your commentary, please?
So Jared, very insightful and powerful presentation, and very refreshing to get an outside-in view from someone that's worked across so many industries and clients. I think the two pieces that really were very powerful, at least for myself, was where you were sharing the benefit of having an automated, integrated solution in terms of the forward-looking view, and building that into the continuous learning and continuous improvement cycle that we, for example, at Maersk are driving. Because moving away from the past view to a more forward-looking view is something that definitely I think all organizations and businesses could benefit from, especially in the uncertain times we're operating in. And secondly, clearly what's clear is that what worked in the past is not working, won't work now, and is not going to work in the future. And clearly a move towards a more agile, a more collaborative end-to-end process enabled by a strong technology suite is clearly the path to follow. So thanks for sharing your insights.
João, thank you so much for your commentary. Jonas, what is your perspective on this?
Well, my perspective, I mean, I must admit, I love technical solutions. I love integrations. And I think when I listen to your presentation, etc., and I fully agree with you, you need to have the buy-in, you need to have the management support to be able to implement anything, basically. But I'm really thrilled, actually, about taking the integration one step forward, and I think your presentation gives support for that, basically. So that would be my most important takeaway.
Thank you so much. Thank you for these presentations, for your commentaries. And now, just a quick reminder to everyone that we're about to start our Q&A session. But as a conclusion, let me remind you that today we are looking at 3 different perspectives on the subject of capital planning getting beyond the traditional. So key takeaways from a CFO of organization, head of business planning and analysis and capital planning, and from the representative of technology organization as well. This is the timing now to start the Q&A session. And I would like to ask all our panelists to switch on their cameras, to switch on your microphones, please. Just information for everyone that please continue to send your questions via text box, even if we don't have enough time to answer all of them. And I already see that there are a lot of questions. Some of them wouldn't be, there would be no time to answer. We will be able to answer after the meeting through email. So the first question is to João. João, do you feel in general the issue with capital planning is underspent or under forecasting, or are there anything else?
I think a combination of both. As I mentioned in my presentation, as an organization, we've improved, but still building on the forecasting capability around capital planning and investment planning. So we've seen parts of the business where there's been an underspend versus original budget, an overspend, timely delays. I mean, all that ties back to a forecasting deficit in terms of capability, and the whole finance business partnering capability on the people side will go a long way to addressing that in terms of building that muscle, forecasting muscle.
Thank you so much, João. Jonas, the next question is to you. While the balance sheet drives profitability in financial services, it has less prominence in other industries. How would you recommend it to be used in non-financial services industries, Jonas?
Yeah, that depends a little bit, of course, what kind of industry. I think there's as always, there's a gray scale, so to say. It's not a black or a white. It's that the balance sheet is have very little relevance or very big relevance. So I think it depends a little bit on what kind of industry you have. But I mean, investments we basically have in all kind of businesses, and investments require capital. And it puts a stress on any balance sheet. Then, of course, you need to adapt a little bit to how important it is, and if you really need to start to do, as I said, allocate all of the balance sheet, etc. So I think it depends very much on what kind of industry you are in. But I would say if you have big investments and capital needs, then I think it's a great benefit of actually trying to start to allocate parts of the balance sheet, at least I would say, to capture that point. But exactly how, I mean, it's a little bit difficult to give a general answer to that. You have to think a little bit about how you consume actually capital and how you stress the balance sheet from a business unit perhaps point of view.
Thank you, Jonas. Jed, the next question is to you. A very interesting question. Do you recommend the execution of project-based business also to be done on this capital planning system, or are there projects should be executed on ERP system or any others? So what would be your recommendation?
Sorry about that. I think it really depends on the type of project, but absolutely project-based businesses can benefit from the use of an automated capital expenditure planning platform. As you probably saw in the visual in the third slide, we have project and portfolio management systems that feed some of the data into an automated capital planning system. So I think ultimately it really would depend on the type of project, but ultimately any automated tool around capital expenditure planning really should be able to accommodate that.
Thank you so much, Jed. And the next question to you. Any recommendations on strategy, how we can get buy-in on the process of change or technology implementation from the top management? What is your experience with this?
My experience is it's really around communication. It's getting the right stakeholders at the table. I know it's difficult, trying to get senior executives in their time, but you really have to, you have to present the data in the proper way. And I think the ability to look at to be able to do scenario modeling and to show, return on investment, I think really is what hopefully gets the attention of senior management as it relates to buy-in in regards to maybe purchasing an automated tool or investment in some other type of capital project. And ultimately, part of, what I've worked on with customers over the years is really helping them to provide that data and create the story for senior management so that they truly understand, what it is that they're investing in and what the return is, should they decide to do it. And then ultimately, once they do see the data, more times than not, they come to the table and they provide that investment, and then they also provide that buy-in and support for the folks that are proposing that particular investment.
Thank you so much, Jed. And now we have time for the last question. This is the combined questions to João and Jonas, and it's about the COVID situation. A very interesting question. COVID has changed the world and the economy significantly. Can we digitize and plan COVID rate in capital planning? For example, we can calculate annual inflation in investment projects. Can we consider some sort of COVID rate in the same way? I would like to ask you, Jonas and João, to answer very quickly due to the timing. So yes or no, and why? So Jonas, what would be your answer?
Yeah, if I understand the question, that might be the first question back, but I interpret it as there is a need, so to say, to perhaps simulate or build a scenario around the COVID impacts, because I think COVID has affected us in so many different ways. And we also have to remember, in some industries, we are actually doing better due to COVID, which sounds a little bit strange, but that's reality. So I think a COVID inflation rate, I wouldn't personally recommend, but to build COVID scenarios around the capital planning, I would really recommend, so to say.
Excellent, thank you, Jonas. And João, your quick answer?
Yeah, I'd also echo Jonas's comment. What I would add is we are struggling to replicate key assumptions around our scenario planning that we're used to and actually got quite good at in the past, and replicating it in terms of, under the new COVID, environment. I mean, we specifically in our business are not applying any specific COVID, assumption, but what we are doing, and echoing what Jonas said, is we're building various scenarios in terms of what the potential impacts could be, either globally, regionally, or at business level.
Thank you so much for your answer. And let me, with this, to conclude this Q&A session. But I would like to remind everyone, you still can continue to send your questions. We will answer in emails. And now, just a few final slides to remind you about our global FP&A empowerment survey. We are we're asking many people to participate, and your participation would be highly appreciated. So please do this. And also a quick announcement about our upcoming webinars. The registration process already started. You're welcome to join us. So finally, I would like to say thank you so much to our very experienced panel, very international panel, and three practitioners and visionary. Thank you so much for being with us, João, Jonas, and Jed. Thank you for sharing your incredible experience. I would like to say thank you so much to Finario for making this project possible, for making this webinar possible. So thank you for your support. And finally, I would like to say thank you so much to all of you who participated at this meeting. So hundreds of you from many countries around the globe. Please reach out to us, share your experience with us, share the best practices. Let us move FP&A or XP&A, how we call, to the next level. And before I conclude this session, I would like to remind everyone that there will be survey just after this last slide. And please, if you can stay and share your experience with us. Thank you so much, João, Jonas, and Jed. All the best.
Thank you, Larissa. Stay safe. Thank you.
Thank you.